Ladies and gentlemen, good day and welcome to the Gateway District Limited Q4 FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve the risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. Today on the call we have with us Mr. Prem Kishan Das Gupta, Chairman and Managing Director, Mr. Ishan Gupta, Joint Managing Director, Mr. Sampath Gupta, Joint Managing Director, Mr. Sandeep Shaw, Chief Financial Officer, Mr. Rajguru Behgal, President Rail, Mr. Manoj Singh, President CFS. I now hand the conference over to Mr. Prem Kishan Das Gupta. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen, and a warm welcome to all the participants to the post-results earnings call of Gateway Distriparks Limited. We have uploaded our results, press release, and investor presentation on the stock exchanges and the company's website. I hope you all had an opportunity to go through the same. The company has done well given that the exports have been suffering in the second half of the year. However, we can see an upward trend in the same starting from the month of March, and we are hopeful that going forward we will see growth in our volume and improve the efficiencies which were impacted in the last 2 quarters due to imbalance and lower double stacking caused by lower exports versus imports, which increased. One thing pertinent to note is that we were operating Punjab Conveyor CFS at Nhava Sheva for 10 months in the previous year, which is not there in the financial year 23 financial. For a like-to-like comparison, excluding Punjab Conveyor CFS, the throughput grew by 6.19%, total revenue grew by 10.5%, and the total EBITDA grew by 1.2% for the full financial year. Just to compare, the revenue from Punjab Conveyor operations were 89 crores, EBITDA 15 crores, and after taking into account the lease of 20 crores that we had to pay and the depreciation, so you can see the increase in the PAT excluding Punjab Conveyor. In addition, we had a one-time 11 crores gain in the previous year in FY22 due to acquisition of 2 acres of land in Gadi Hills. In addition, we are focusing on increasing our network footprint, and we are actively evaluating new terminals in northern and central India. We welcome any questions or comments that you may have at this time. With that, I hand it over to the moderator for Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We request the participants to limit their questions to 2 per participant at a time. Should you have more questions, we request you to join back the question queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, you may please press star and 1. The first question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Good afternoon. My first question is that with commissioning of the Pritla Rewari stretch on Western...
Mr. Kishore, sir, your audio is not clear. Can you use the handset mode while speaking and not the speakerphone?
Yes. My first question is in relation to commissioning of Pritla Rewari stretch on Western DFC. What is the outlook on Gateway's double stack volumes for FY24? And how many double stack rakes did you handle in FY23? And so far this fiscal, what has been the progress? That's the first question.
Okay. Hi, Rajguru this side. I'll start regarding this new section which has been recently commissioned. So basically this is a Dadri to Rewari section up to New Pritla. So the double stacking has already started from Dadri side, but we have a terminal at the Pyala Faridabad. The OHE work has started, and we are expecting that we will also use this opportunity to start double stacking from our Faridabad terminal in another 3 to 4 months' time.
Okay.
So as you are aware that we have increased the network of our terminals. So right now we are able to do double stacking only out of our Gurgaon terminal. But with this this section coming up, we will be having twin hubs, one at Gurgaon and one at Faridabad. So we will be able to, we will have a leverage that we can do double stacking at both these locations.
Okay.
And with regards to the double stacking volume, about 40% of the volume was carried on the second stack for this year.
And what is the outlook for FY24? You would say, with all these developments?
It depends on the EXIM balance. So with exports improving, we should go back up to at least 50%. And Faridabad becoming double stack and Viramgam, Mundra also becoming a double stack route, this number should increase.
Okay. My second question is, how is the EXIM imbalance playing out so far this fiscal, and what is the meaning for? And also with all the double stacking benefits, do you see that road to rail shift accelerating?
So if we see the EXIM overall EXIM imbalance, so if we talk about Mundra, so there is less imbalance, but yes, there are some ports like Pipavav where there is more EXIM balance. So, but it is still in the range of like 57% is import and 43% is export. But this is primarily due to the reason that there was a degrowth of around 10 to 12% on the export side. But this year, what we are anticipating is that now ultimately the export is going to come back to its original number, and this imbalance is going to get reduced. Plus, with the help of Kashipur, so we are also able to source some of the empties going towards Pipavav. Yeah. So we are looking this financial year on a positive outlook that imbalance will get reduced.
Okay. And on the other part of the question, which was in relation to road to rail shift, I mean, with all these higher levels of double stacking, is some road to rail shift happening, or is there competition from roads actually?
No, the road to rail will take a long time. So it's a gradual shift. Like we've maintained before, it's a long-term target over the next 10-15 years. It'll jump up from, say, the current numbers of 30% to 40-45%. But it's not going to be an overnight shift.
some big portion will come to a shift when JNPT is fully commissioned for the DFC.
Just one last point, for EXIM ICD rail container business, what is the overall growth expected for the market in FY24? And given that you added fresh capacity, what would be the outlook for Gateway Distriparks? That would be my last question.
Sorry, it was a bit unclear, but I think if you're asking about the growth rates, we're looking at double-digit growth for the rail side. CFS side, we're expecting flat, maybe a marginal 1-2% growth.
Okay. Thanks, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for taking my question. I have two questions. The first one is that we were targeting an EBITDA of 6,000 rupees per TEU. But if I see in this quarter, our EBITDA per TEU has dropped QOQ. So first of all, what are the factors that resulted in this drop? And is the target of 6,000 rupees per TEU, has it been phased out? Have you moved the timelines, or when can we expect the company to hit the 6,000 rupees?
So I'm not sure which numbers you're referring to, but on Q4, our EBITDA per TEU is coming to 5,975 if we include other income as well. And it's an increase from last quarter.
No, so I'm not including the other income. It's just
so even without other income, our blended EBITDA per TEU is coming to almost 5,600, whereas last quarter it was closer to 5,100, 5,200.
Okay, so when are we going to hit this 6,000 number? Will we hit this in FY24 sometime?
See, basically what has happened is that due to imbalance between import and export, there was underframe running or carrying empty containers. So there was and the double stacking was affected. So all these, led to a lesser margin. But with exports now coming back and imbalance being reduced, and hopefully it will catch up when the volumes further increase. So we will be there. Basically, our target is 10,000 rupees per TEU in the rail business and roughly about 2,000 rupees in the CFS business.
Okay. The second question is essentially on Kashipur ICD. So how is it shaping up? What kind of volumes did we get this quarter? And what is the target for this year? Do we expect it to hit around what we have been targeting around 6,000 TEU per month kind of volume?
So Kashipur, there has been now upward trend. So if we look at the quarter 4, our market share in the Uttarakhand belt, so it has risen from 25% to 32%. So we are able to attract new business from our competition ICDs. So earlier we were doing on an average 2,500 TEUs per month from Kashipur. But now going for, like in March we did close to 3,000. But this quarter we are expecting that at a run rate of 4,000 TEUs per month, we should be able to do close to 50,000 per year from Kashipur itself. And another 2 years time, that rate should be 6,000 per month. So we'll be hitting that 72,000 per annum after 2 years.
Okay, sir. Thank you so much for the elaborate answer and all the best.
Thank you. The next question is from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yeah, good evening, sir. Just wanted to get some more clarity on the, empty running and the double stack, etc. Because it appears that the rail, the rail EBITDA per TEU has actually declined on a quarter-on-quarter basis. So, or is it really that the CFS has seen a, sharper decline? Because it looks like on a blended basis, there is a bit of a decline. So if you can just elaborate a little more on the details for the same.
Yeah, it's the CFS side has taken a hit as volumes have gone down and fixed costs are, stable over there, whereas rail, it's more on a variable basis depending on rail haulage being the main cost. So actually, EBITDA per TEU on the rail side has gone up this quarter compared to last quarter. And in March, we handled the highest ever throughput that we did in Gateway Rail District, in the rail verticals history. So the rail segment is doing well.
So would it be fair to say that, CFS would have gone down to, 1,500, 1,700 because otherwise it wouldn't make sense. So that's been the kind of decline in the CFS aspect?
Yeah, that is correct, Bhumika. The CFS side is somewhere around 1,600, 1,700.
Okay, and broadly, what would be, sir, the EBITDA per TEU for rail on a broader aspect?
So without other income, it's about 9,700 for this quarter. With other income, it's crossing 10,000.
Okay. Now, just because, port volumes and trade, etc., has been a little weak over the last couple of months, have we started seeing any improvement? What are the kind of visibility that you're seeing from the client's end in terms of exports, the imbalance kind of improving? You mentioned it was 57% import and 43% export. How is the trend looking going forward?
So Bhumika, so what we have seen is that import is because India is now the real consumption story, import is robust. And if we look at the pendencies at all the gateway ports, so they are very healthy. Regarding exports, we are seeing some green shoots now, especially in NCR belt. There is some like 10% increase we are seeing on a month-to-month basis in April, May. So we are expecting that this export should also start growing at other locations. But if we look at NCR, yes, the volumes for exports have started growing.
Okay. And, with the Kashipur now starting to come in, we did about 3,000 TEUs in the month of March. We'll probably scale up to 4,000 in April, May, etc. How is this going to benefit in terms of the double stack and the margin profile?
So we use our hub and spoke. These containers from Kashipur come to Garhi, and from there we are sending it double stack. Similarly, on the import side, they come to Garhi, and from there we send it on single stack trains to Kashipur. So the double stacking, it will help in double stacking and also faster evacuation.
I would like to add another point here. So if we look at the composition of business at Kashipur, so we have more 40 feet containers, like 70% of the business is of 40 feet containers. So that gives us more flexibility of more double stacking.
Okay. And, from the angle of, 40% of the volumes going on the second stack, so what can this possibly increase to as we move forward with this Kashipur kind of having more amount of this 40 feet TEU?
So the target is to go up to 50% right now in the immediate term. And once the new wagon comes in, it can go even higher.
So in a sense, and this would help in terms of ensuring that our EBITDA per TEU kind of out here moves upwards of 10,000 without the other income as we move forward. Would that be a fair assessment?
Yeah, the 10,000 per TEU, actually, if the export side becomes okay, then we'll hit that without the new wagon also.
Okay. And is it possible to get the empty running charges for, fourth quarter and for the full year?
It's not handy right now, but we'll share that data with you later.
Okay, sure. Thank you and wish you all the best.
Thank you.
Thank you. The next on the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, good afternoon. Thank you for the opportunity. My first question is, if you look at the Indian Railways volume for the fourth quarter, it is up 7% on a YY basis. While if I strip out the Kashipur number, it's probably a decline of as much in percentage term. So can you help us understand how do we explain this? Is there a market share loss? Is it at certain location Indian Railways is doing more volumes? Any further clarity you can provide, sir?
So Indian Railways volumes include bulk also. So it's not limited to containers. And I think...
No, sorry, I'm interrupting. I'm talking about 7% EXIM growth for Indian Railways for containers.
Okay, yeah.
So this will be the overall. So what our ICDs are located in, so we can talk about the NCR market share.
Okay.
So we have the number in front of us. So NCR market share market has only grown by 2%, whereas we had grown by 4 to 5%. And in Ludhiana also, so we have grown by 6%. And we have able to retain our market share up to 31%. So
sorry, sir, are you talking about fourth quarter or full year, sir? Fourth quarter, right? I presume.
I'm talking about full year.
Right. Okay. So you're saying 31% market share in Ludhiana you have maintained.
And 17% in NCR.
17%. It's also maintained. There is no market share loss.
No.
Okay. And Ludhiana, what is the market growth? You said NCR market growth is 2%. How much would that be for Ludhiana?
Ludhiana, we have grown by 6%.
And the market growth, sir?
Market growth has been less than 6%, like it is between 4 to 5.
So broadly, I mean, since we maintained the market share, Ludhiana market has grown in a similar way. That's why we're stuck at 31-32%.
Right, that's also fair.
In addition to that, because exports dropped heavily in Ludhiana region and imports were more, so one was there was an imbalance, and at some point of time we didn't entertain the new customers who wanted to use our ICD because that would have created more imbalance. So imports have surged there quite a bit, whereas exports have taken a big hit in that region.
Understood. So when you say, sir, we didn't allow customers to use our ICD, is that like we are not doing the rail transportation but only the terminal handling? Have I understood?
No, I mean, see, we have our regular customers, the shipping lines, and our long-term customers. So beyond that, we accommodated some more business which were coming from, say, other shipping lines. It was more or less like a spot business. So we did some, but at some point we had to refuse, So whether they came by road or some other operators carried it, that's a different thing. But we could have increased our volumes, but then it would have been, the cost would have been very high, for empty running back to the port.
Right. Understood. Sir, if you don't mind, can you help us with the EBITDA per TU? Because I'm seeing the total EBITDA for the quarter is 93 crores, excluding the other income. And the EBITDA per TU is 5,100. So if I put 9,700, which you mentioned without other income, the EBITDA per TU for CFS is just 300 rupees. So if you could just give the absolute EBITDA per TU, sir, or absolute EBITDA for CFS and rail for the fourth quarter.
Including other income, it's about rail is at about 90 and CFS is at 14. The other income is not exactly split vertical wise because things like interest income and all other and some write backs also. So that's why we're looking at with the other income included, our blended thing is coming to 5,975 on an EBITDA of 104 crores.
Okay.
And
I see that sorry,
the split of that 104 crores, then if we just allocate the TUs to it, the EBITDA, I mean, it's coming 10,500 for rail and 1,600 for CFS.
Understood. I see that the other income was significantly large in this quarter compared to 3Q 23. You mentioned some write back or something. Can you please clarify on that? Is there any one-off out there?
Yeah. There were some provisions made in the earlier quarters. and we collected some amounts, and there were some reversals of expenses which were not incurred in those quarters. So that is the right back.
How much would that quantum be, sir?
Around 10 crores. 10 crores.
Around 10 crores.
Around 10 crores.
Understood. And sir, if you could talk about, in terms of the pricing scenario, how is the pricing scenario in the pockets where we are operating in? Are you seeing, in terms of competitive intensity, are you seeing the competition giving higher discounts or rebates and putting pressure on the price?
See, competition was always there, and it still continues. We see that more on the CFS side than on the rail side, because rail side location and the services and the long-term contracts help in retaining the business and continuing the business without we don't have to discount every now and then. So more or less, it is the CFS which where the margins are being compromised.
Got it. Sir, if I may ask just one macro question, in terms of the market size, can you help us, in terms of the million TEUs in the Northwest market where the DFC is actually located, and within that, if you could split the in terms of NCR, Ludhiana, and the rest?
We have these figures, but Rajguru will share with you separately, because that's a long list of all the ICDs and total TEUs in Ludhiana.
Sure, sir. I'll reach out to him. Thank you so much. I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Abhishek from B&K Securities. Please go ahead.
Yeah, hi. I just want to check on the CapEx side, how much should be built in for 24 and 25?
Your voice is not clear. Can you please use the hand?
Yeah, I just wanted.
The line to the current participant has dropped off. We'll move on to the next question. That is on the line of Gaurav Gandhi from Glory Tail Capital Management. Please go ahead.
Yes. Hi, sir. Just one question. If I look at the notes, total tax-related issues are amounting to almost 160 crores, and the SEIS benefits in disputes amount to almost 170 crores. So can you share what can be the impact of all these pending issues, if anything material?
Before SEIS, what was the thing you said?
The SEIS benefits in disputes. The commissioner has raised, given us the show cause notice, the commissioner of customs in Kolkata regarding 102 crores, and in CFS business also there are certain issues with SEIS benefits during 2015 to 18 of around 69 crore rupees. So can you throw some light on these issues, if anything material impact these have on our P&L? Will have.
No, there is no material impact on our P&L, because the earlier government has, under SEIS scheme, DGFT has issued certificate to our rail vertical and CFS vertical, not to us also, but up to other players also, which we have encashed it when we got the certificate in the respective financial year in 2019-20 and all that. And after that, DGFT has issued a so-called notice to us and to other players also in rail and CFS vertical about questioning about this eligibility of the things, and which we have taken our opinion from our lawyers. We are on a very strong thing, so that's why we are fighting against this so cause and filing our reply at appropriate forum.
All right, sir.
Yeah.
That's it.
Just to add, the SEIS scheme was, taken away in one of the budget speech. So all our SEIS applications were processed before that, and we got the scripts. After that, we have not applied, because since it was withdrawn in the budget, so we were not entitled after that. So prior to that, whatever was there, it was as per government policy and as per rules and guidelines, and it was not for just 1 year. We had applied for 3 different financial years, and we got it that time.
Okay. All right, sir. Thank you. Thank you very much.
Thank you. The next question is on the line of Krupa Shankar NJ from Avendus Spark. Please go ahead.
Good evening, and thank you for the opportunity. My first question is on the market share side. So while you have clearly stated earlier, sir, that the NCR market has grown only at about 2-3%, and also the Ludhiana market is growing at about 5 to 6% last year. But when I look at the underlying ports, which is here, JNPT, Mundra, Pipavav, all of them, growth should be higher than about 5% at least, and also the Indian Railways share going up 7%. Where is the disconnect? Where exactly are the volumes going from these ports to?
So, like JNPT port, majority of the volume is for the Maharashtra region, which goes by road. Similarly, for Mundra, a lot of it goes by road for local Gujarat market. Pipavav is more on the rail side, but that also has its local volume. And apart from NCR and Ludhiana, these ports are also servicing with likes of, Kanpur, Indore, Raipur, Bangalore, Hyderabad. So it's evenly distributed across the country.
Well, I do understand that, but NCR and Ludhiana, I think these are the two biggest rail markets in the country. And if rail is growing at 7% and these markets are sub 7%, then there should be almost a 10 to 15% growth in other markets. Is my understanding correct?
Yeah. So we've also had growth. So it's not that we haven't had growth.
No. I'm not denying that at all. Of course, I'm not. Because I'm just asking on an industry standpoint. It's quite perplexing to see that rail as a whole, the volume growth has been happening in all the other sectors where barring the top two sectors for rail at least. That's what I was wondering.
So it is happening on a pan-India basis. Also, I don't know this 7% Indian Railways figures, whether it includes domestic or not also. And going strictly by the port volumes, you can't measure the rail volumes. So there's a difference there. So if the port is growing, doesn't necessarily mean that all that is coming to rail.
Sure. Got it. Okay. The second question is on the CapEx side. Now, of course, Jaipur is expected to come on stream. Any timelines on when is it expected to come on? And the addressable market in Jaipur, as well as how do you expect things to scale up out there, given that Gateway would be the second player entering that market? Just some light on it, and final CapEx number for FY24 if you have firmed up on the numbers.
Yeah. So Jaipur will come by the end of this financial year. And right now there's one ICD there. The second one will be starting very soon, and will be the third ICD there. The total market size is anywhere from 10 to 12,000 TEUs, and it's growing quite fast. So if we earlier, when we had announced, then there would be only two ICDs, but now considering three, we at least expect to take a third of the market share within 2-3 years of being operational. Since Kashipur was a acquisition, it was already up and running. Jaipur will take a bit more time to develop and grow as shipping lines open there, being points, and we the presence over there from scratch.
And the fact is that this is on the double stack route, the location that we have. So from Gadi, we can top it up with the volumes, in both the directions between Gadi and the port. So it will add to the double stacking operation.
On the capex side, you had mentioned, so about 300 crores capex is planned for this year and next year combined. This will include 2 locations, new locations, and also upgradation of existing terminals as well as Jaipur and replacement in our vehicle fleet.
Okay, and brake addition is still not on your plans?
Sorry, didn't understand that.
The rake addition plans, they're still not part of the capex which you have outlined so far for the next 2 years.
We'll be going on a lease model for the rake addition, and we have 3 rakes planned for this financial year.
Got it. Thank you, and all the best.
Thank you.
Thank you. The next question is on the line of Achal Lohade from JM Financial. Please go ahead.
Yeah, thank you for the opportunity, sir. Just wanted to check, given the now the merger is done, is there any synergy benefit you would be able to talk about now? What has driven this in terms of the benefits?
So there are a lot of softer benefits which we can't really quantify, but it's a leaner management team. It's better negotiation with shipping lines, freight forwarders, because customers and vendors are common for both verticals. And we have a centralized office now, whereas we had two offices earlier. A lot of compliance-related issues are, they're much smoother now. So those are the main benefits. And then having a larger balance sheet, improved credit rating, cash flows are also, within one company, so that makes it much easier for us.
Even the leakage of, money due to upstreaming in the parent company, so we can see that that benefit also in the financials.
Understood. So just with respect to Kashipur ICD, would it be possible to get some more understanding in terms of the EBITDA per TU for Kashipur? It would be higher than the blended average, right, given the higher lead?
Yeah, so it's slightly higher, but not that much different from our average EBITDA per TU.
Understood. Understood. All right, I think that's about it from me. Thank you.
Thank you. The next question is on the line of Atul Tiwari from Citi. Please go ahead.
Yes, thanks a lot. So just trying to understand it more between you.
Sir, your audio is not clear. Can you use the handset mode while speaking?
Yeah, hello. Am I clear now?
So it's sounding a little distant.
Yeah, is it better now? Hello?
Much better, sir. Thank you.
Yeah, thank you. So just trying to understand the EBITDA per ton in the rail and CFS business in fourth quarter. So you said that it is 9,700 in the rail business and about 16 to 1,700 in the CFS business, right?
Right.
So, but if I do that calculation, I get a number which is much higher, and the total is about is much higher than 94 crore rupees, which is your reported EBITDA X of other income.
Yeah. Sorry, so I think it's better to just focus it on including other income, because all this is related to the business only. It's things like auction income and some write-backs of provision. We'll just rework the excluding other income number. It seems the sheet I have in front of me might have a figure out, but it won't be too distant. I mean, if you look at the overall EBITDA for the quarter, it's 104 crores roughly. And on that, if we take 10,500 for rail and 1,600 for CFS, then those numbers are fine. But excluding other income, it'll be slightly lesser than what we were saying earlier.
Okay, sir, got it. Clear. Thank you.
Thank you. Ladies and gentlemen, that was our last question for today. Participants have missed out due to time constraints. They can reach out to the management and SGA. On behalf of Gateway Distriparks Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.